Green Rush, Mining the Energy Revolution with Matt Watson.
Hello, welcome to Green Rush, Mining the Energy Revolution. I'm your host, Matt Watson. Each week, we take a look at the periodical table and take on yet another metal. This week, we're going to talk about platinum, and I think it potentially is a sleeping giant, the way this trajectory is headed with the hydrogen economy. To help us discuss platinum and all that's going on is Mr. Edward Sterck of the World Platinum Investment Council. He's the Director of Research there. Ed, welcome to the program.
Thank you very much for having me on. It's good to join you.
Oh, so I put together just a simple slide, really to kind of give you a chance to tee it up and explain to people what is the World Platinum Investment Council. What are you guys about? How big are you? What's your vision and mission in life?
No, thank you, Matt. And it is an important piece of context for people to understand when they're listening to our views. So we were established in 2014 by the major South African platinum and PGM producers with a simple mandate, which is to grow investment interest in platinum. This came on the back of sort of the great success that our shareholders had in terms of developing the jewelry market through our sister organization, the Platinum Guild International. We develop investment interest in platinum in two ways. So firstly, we partner with mints, refineries, bullion dealers, and so on around the world. And we help them design, market, and sell platinum investment product, predominantly to a retail audience. Then the other side of the organization, which is where I sit, is focusing more on institutional investors. And we think outside of South Africa, the platinum market is not particularly well covered by the sell side, and we try to fill that gap. We do so by producing a significant volume of research into platinum markets that we provide free of charge on our website. That research is intended to be completely unbiased. Ultimately, you have to be unbiased, otherwise people stop listening to your views. And so to that end, any numbers that I speak to today that are 1 year forward or more recent or historical are produced for us on an independent third-party basis by a group called Metals Focus. They do the same for the World Gold Council and for the Silver Institute. And then anything that's 2025 and forwards is our own internal research. So, just to kind of repeat, really, 2024 and historic, those are Metals Focus's numbers and their views that I will be speaking to. And then anything beyond 2024 is our own numbers.
Fantastic. So, Ed, you guys have been challenged. The slide I have up here, it talks about the platinum group metals. If you were to take the total troy ounces mined plus recycle, so your total supply, if you will, times the average dollar price for the year, for the fix and plot this out in billions of dollars, the PGM market, it's been on a roller coaster, you could say here. So, it was running around a $20 billion collective market for all 6 platinum group metals, shot up to nearly $60 billion in 2021, and now has begun to decline. And the big shakers and movers, if you will, in this, it's not so much the supply volumes, it's the pricing, of course, of palladium and rhodium, which skyrocketed. Platinum held fairly constant throughout this whole interval, but this has to present some unique challenges to the World Platinum Investment Council. Would you agree?
Look, I mean, it's not so much a challenge for us. I think it's a challenge for our shareholders in terms of managing their operations and cash flows. In terms of explaining it to the market, that's obviously something that sits with us, and we tend to look at dynamics and provide that insight to the market. But we don't price forecast because of our shareholders being more than 50% of global platinum supply effectively. So we're quite tightly bound by antitrust legislation. So in terms of explaining why the price has moved in a certain way, that does sit with us. But certainly it's more of a challenge for our shareholders than anything else.
Understood. Well, let's talk about platinum. So I think I have your numbers up here when you look at the historical perspective. So here's platinum. Platinum, people don't realize it's a pretty mixed set of demands that are involved here. About a third of the platinum goes into auto catalyst. A lot of this is for diesel products. I think about 70% of the auto cat weight is for diesel, either heavy duty or light duty diesel, and a little bit in the gasoline systems. Chemical applications, glass production, investment products, jewelry, as you talked about, a nice big bucket now in the purple. Chemical demand, some others, and I think the big hope for platinum is the emergence of the hydrogen economy and fuel cell demands that we are hoped to be growing over time. And it's against a backdrop where the mine supply on this dash line here is projected that we're going to start seeing declines. You know, the OPEC situation in South Africa and other locations, forcing miners to kind of consolidate and shrink and shutter unproductive shafts. The recycle volume on top of that, the mine plus recycle. It's a situation where I think most analysts, not just myself, but I think everybody on the market sees that we're heading into a zone where we're going to be in a structural deficit going forward. So please add any commentary you like to that, Ed.
Yeah, I mean, that's very much how we see things. You know, it's just fundamentally the combination of mine and recycling supply continuing to run short of demand. So going forward, we think that demand grows fairly modestly. You've got the combination in terms of auto catalyst demand declining very slightly. So we've got a negative 1.2% CAGR for auto demand from internal combustion engines, I should say, between now and 2028, which is probably a slower decline than most people would anticipate. We can come back to that later on. But added to that, towards the end of the time series, we only forecast as far as 2028. Yes, we begin to see more meaningful levels of hydrogen demand for platinum coming in. And as the drivetrain continues to electrify through the 2030s, that becomes substantially more meaningful and ultimately the biggest end source of demand for platinum.
Fantastic. So just real quickly for the audience and our listeners who may not understand, AutoCAD's obviously a big piece of this market, a dominant piece of palladium and rhodium. They're, the demands, they represent over, 80% of the total demand of palladium and rhodium. So very sensitive to the ICE vehicle volumes. And when you look at the big three metals, the PGMs that go into auto catalyst systems, platinum, palladium, and rhodium, over a 5-year span, we've seen platinum, gradually climbing. I think most analysts predicted that. Palladium, however, we've seen this big decline where it's been dropping pretty consistently for the past few years. Rhodium took a big tumble from a $30,000 a troy ounce high. It's come down, closer to 5,000, and it's basically going laterally right now. So this is really driven, I think, by the sales volumes. And I'm just going to rattle off very quickly just to give people some context. The loadings per vehicle, what's interesting, most everybody agrees that the loadings are up on the heels of VW Dieselgate. They've changed the protocols on testing of the emissions from your vehicle, and they do it more dynamic testing now, over hill, over dale. They really stress the vehicles. And as a result of that, we've seen the loadings of PGMs per vehicle increase dramatically, some 17% on gas, up on diesel as well, heavy duty up dramatically. And so these declines come in the face of really significantly, higher loadings. Ed, your comments on that so far?
Yeah, look, it's not just loadings being driven by the fallout from Dieselgate. You've also had quite significant changes to the regulatory environment, particularly in China, and particularly in China with regards to heavy-duty applications and non-road applications. So, in a way, as a result of the kind of the fallout from Dieselgate, to use the same expression again, there has been effectively a kind of a compliance requirement for the automakers to make sure that they are compliant, and they've reacted to that by including higher loadings on diesel vehicles, light duty diesels in particular. But that you've got to remember that that's been kind of offset by changes in the drivetrain mix. So if we think about diesel in 2015, the biggest market for light duty passenger diesel vehicles was Europe, and it was a roughly 50 market share between gasoline and diesel in that market at that time. Since then, we've seen consumers effectively react against the outcome of Dieselgate by moving back towards more gasoline vehicles and obviously increasing electrification as well. And so diesel market shares declined from 50% in 2015 to around 17% today. And this is in light duty passenger vehicles. So, and that Europe, and that trend seems to kind of be continuing. So most of the loadings increases have been driven by regulatory changes, where the regulator has been in different parts of the world steadily reducing the emissions levels that are acceptable, and the automaker react to that by increasing the loadings per vehicle. And another factor has been increased hybridization. So because they're operating for more of their, a greater period of time with the engine sort of being turned off, and therefore they operate with a lower engine temperature. That reduces the efficiency of the exhaust treatment system. And you can compensate for that in order to make sure you remain compliant with emissions legislation by increasing the loadings. And it's about 10 to 15% higher loading per vehicle for a hybrid vehicle versus the pure ICE equivalent.
That's right. Agreed. The designers of these catalysts, they tell me, really the cold start is the most strenuous part for a combustion engine. When you start your car in the driveway cold in the morning, that's when the transient spikes in emissions are at their highest. And the only thing worse than starting your car cold in the driveway in the morning is having a hybrid. You start off on electric, you get on the freeway, you're doing 55 miles an hour, and suddenly you run out of energy and you have to turn the engine on. Turning the engine on cold at speed is even worse. And I'm told that the cold start has had as much to do with that threshold of how they set these levels on the hybrids. But you're right, hybrids are higher. That's why Toyota Priuses are favored from an AutoCat theft perspective, catalytic converter theft perspective. The thieves know who to target, and they know the loadings per vehicle. So that's why the Toyota Priuses have been targeted so heavily. But no, I agree with everything you said there. The part that just blows me away that I don't think many analysts saw is the pandemic and the impact on global vehicle sales. And on this chart I have up here, this is from Bloomberg, and I ran through the numbers. I'm pretty close to Bloomberg's outlook. We were on a trajectory where we thought we were going to be climbing, the market would be climbing in total global vehicle sales like this. And obviously we've had a huge impact. And I would claim a full decade of lost volume on vehicle sales that have really hurt the ICE sales in particular. Yeah, there's a mix of BEVs and the electrics and some plug-in hybrids beneath that. And then, the hybrid shown in the gray, that's really not what has disrupted the PGM market. It's just the aggregate sales more than anything that have, in my view, hurt the PGM, specifically palladium and rhodium in particular. Would you agree with that, Ed?
Yeah, I think that has been a major factor, and it's not so much sales. I mean, remember the reasons behind the drop off in production volumes. Well, it was more of a production led factor, really. So, yeah, sales were probably impacted by effectively people being captive in their homes and not driving to work and things like that. And so, they were driving fewer miles, less reasons necessarily to upgrade their vehicles. But the bigger impact was ultimately the semiconductor shortage. So as a result of that, automakers just simply couldn't produce vehicles. So, that resulted in effectively underproduction. And if you do the rough numbers in light duty vehicle terms, over the course of, over the course of 2021 through 2023, if you flatline, rather than your chart there where you showed light duty vehicle sales continuing to increase, if you just flatline it from 2019, then you end up with an underproduction globally of around 33 million light duty vehicles. So that's 1/3 of, roughly of annual demand, slightly more than 1/3, 40% or so. So that's a lot of vehicles that weren't produced, most of which were probably going to be ICE or hybrid vehicles, with a few battery electric vehicles thrown in, given the more limited market share back then. And so it had quite a big impact in terms of reduced demand requirements for PGMs to go into those exhaust treatment systems. And you kind of take that a step further, and if you think about how the automakers run their businesses and their kind of supply chain procurement processes, and if you were an automaker or if you were the person in charge of their PGM procurement at the end of 2019, you would not have forecast COVID or the semiconductor shortage. And because you're typically looking to kind of run your contracts from 3 months to 3 years out, in terms of the amount of material that you need in terms of coverage, you probably had a lot more higher material. Your contracting rates were much higher than your ultimate production levels were. So, I think one of the knock-on effects is that the automakers probably ended up, as a result of this, sitting on excess inventories. So that kind of negative demand hit has kind of been smeared out over the past couple of years beyond 2022 into 2023, and maybe to a lesser extent this year. And so the effects have been quite long-lasting.
Fantastic. I love it. All right, well, let's talk about the supply picture for a minute. And so shifting gears, lots of information on the slide, I realize, but Northam, just one of the bigger, production folks in South Africa, they talk about the South Africa production, and it clearly has a downward trajectory forecast through 2040 and 2050. A number of older, aging mines are gonna time out, go into life, and so you're going to see the volumes in South Africa decline. It's also the problem with South Africa. You hear a lot about the power grid, a lot of coal power plants. Well, a lot of these coal power plants are actually going to age out as well, and so there's a concern that the grid is approaching into life and needs support on its own. You look at the basket of PGM metals, the six pack, if you will. When they first started producing PGMs, almost exclusively in South Africa, it was very much a platinum, in the red here, platinum specific ore body concentration with lesser palladium and then the PGM miners. You look at Russia, North America, Zimbabwe, or anywhere else, they're harvesting what I would characterize as palladium group metals, because palladium is the dominant mix, if you will, in the ore bodies. And then you look at what's on deck. What are the mines that we have on deck in the next 5 years that are about to launch? And it's very much a palladium-centric mix. And so my fear for platinum longer term is, where's the supply going to, how do we grow supply from this? Clearly there's an opportunity to grow palladium supply, but how do we grow platinum supply to meet all these future demands? Ed, I don't know if you have any thoughts there.
Yeah, look, I mean, I think you need if you're going to grow platinum supply, and we're talking purely about mining here, and I've got some other factors that I'd touch on after focusing on mining. Really, as you kind of point out, it's a South Africa story. So it's a question of having a basket price that is sufficient to incentivize the extant producers and maybe some new market participants to grow output. I think the challenge for them is ultimately, if you look at the ongoing deficits that you touched on at the beginning of our chat, realistically, those decisions need to be being made today, and they're not being made today. And so there is a fundamental disconnect between what's needed in the future and current market pricing. And this is typical of mining. We see it in all commodities. It's a pro-cyclical, decision-based industry. It's not very good at managing itself through the cycle. So that's, and part of that sort of reflects the demands of shareholders at any one given time. Whether they want dividends or and capital discipline or growth at the top of the market. So it's just the nature of the beast. I think the important thing to bear in mind, though, is that these metals are available from other sources as well. So firstly, you've got recycling supply. And in theory, and this is, as I said, kind of theoretical, we've actually got this great resource in end-of-life vehicles that are sitting around globally that could be tapped in the future, and those PGMs can be recovered. Now, a lot is done today already. But we actually only really recycle, I can't remember the exact figure, so I'm going to give a range, 40 to 50% of the PGMs that went into vehicles 10 years ago on average is coming out now. So we're not very good at, and that's not to do with chemistry, because actually when you look at it on a chemical basis, if you take an autocat, you end up recovering something like 98% of the contained PGMs. It's because we're not very good at collecting those end-of-life catalytic converters, aggregating them and getting them to the recyclers. So that's something that that could be improved upon. And I think the other area to bear in mind is actually there's a mutual supply. In a way, you can look at it as being there's a bit of a between these different metals. There's an element of mutual supply substitution. So platinum, palladium in gasoline vehicles, and to a lesser extent in diesel vehicles, can be substituted for each other. Palladium and rhodium can be substituted for each other within catalytic converters. But then you've also got sort of other applications, like, for example, in industrial applications, palladium catalysts can be substituted for platinum to a degree. And also, if we look out in terms of the future for palladium, there's a consensus view that palladium is going into a surplus. That surplus can be eaten up by substituting platinum out of catalytic converters. You can also eat up some of that surplus. So I'm getting a bit off topic now, but by using this palladium as catalysts to displace some of the base metal catalysts in industrial applications. So that there are solutions to the supply, the outlook for supply shortage for platinum in the future, but we need to be quite sort of clever at working our way through them. And I think more R&D needs to go into alternative uses for some of the other PGMs as well.
Oh, I agree. And so I think your point, as platinum prices rise, I think there's going to be a natural drive to design thrifting and design alternatives, including in auto catalyst markets, that they can swap between palladium and platinum. There is some interchangeability there in that product. And I think that's a good dissertation. I think you're right. I think we got to keep pressing the alternatives. But I think one of my pitches to the World Platinum Investment Council is I think we all collectively need to chase the palladium, what I call the palladium challenge, and I think what the Russians termed the palladium challenge. So we got all this palladium coming our way. Palladium is, in particular, you're seeing a significant decline in prices. And to your point on the AutoCAD recycle, this chart I have here, this happens to be palladium. I have one for the platinum as well. I don't have it in this deck, but you look at the historical, how much of the palladium troy ounces has gone into auto catalyst, and you see a huge rise. It's going to continue to climb, and then it's going to start to taper off. The recycle comes delayed some 20 years later. So here we are in this time frame, 23. You're actually harvesting cars from this vintage. So yeah, you're going to see an increase in those returns over time on vehicles which now have over a 20-year lifespan before that palladium comes back. The unfortunate news with palladium is there's so much of the auto catalyst is palladium. Your recycle supply and on top of your mine supply is going to become huge over time. We've got 1.4 billion vehicles on the road. They're going to get harvested, and some 125 million troy ounces of palladium, the incremental, is going to come from that. Man, we've got a slug of palladium, and the palladium picture is just going to become more and more of a surplus situation without new demands. To me, we have to conquer developing demands for the palladium to shore up the platinum. What are your thoughts there?
Yeah, I think that's fair enough. We need to liberate platinum for the hydrogen economy. Ultimately, is what another way of looking at it. I would just say on recycling supply growth for palladium, which we've got in our base case numbers for our palladium supply demand outlook as well. So actually, just to give you some context on that, we've got from 2022 to 2023 to 2028, we've got a 1.3 million ounce increase in palladium supply from recycling alone. And that's based upon a view that those end-of-life vehicles, as you pointed out, are coming through. They're palladium heavy vehicles, and so that drives the supply growth. But it's just worth bearing in mind that we've seen some significant headwinds for the recycling industry over the course of the last few years. So in platinum terms, from 2020 down to last year, platinum recycling supply from automotive from recycling end-of-life vehicles fell by 600,000 ounces. For palladium, I can't remember the figure off the top of my head, but it's probably slightly larger because of the nature of the sort of balance. More than 80% of palladium going into autocats. So the reasons for those challenges, or the reasons for those falls, are the following challenges. So firstly, you've got a shortage of end-of-life vehicles, which seems to be a bit of a fallout from, interestingly, a combination of the global financial crisis back in 2008, when people stopped buying vehicles on a temporary basis, and that's feeding through into a bit of a knock-on effect now, as we're getting to the peak of the scrappage curve. But then also, as a result of COVID and lifestyle changes, working from home more, driving fewer miles, cars are lasting longer. And then because of the semiconductor shortage, there was just that underproduction of new vehicles as well, and so less availability there. You saw used car values skyrocket, and just general reduced affordability. Interest rates are higher. People have got less money in their pocket overall globally, and so they're postponing new vehicle purchase decisions. So that seems to be feeding into the shortage of end-of-life vehicles. And there's one other thing I'd add to that, and I can't get data on this, so I can't actually prove it, but it's just a sort of theory, is that a lot of the people who are buying battery electric vehicles have concerns over range anxiety and infrastructure charging. So they may actually be keeping their old jalopy on the drive, as a backup, basically. And so, again, reducing scrappage. But like I said, I can't find a hard data on that.
There actually are some charts, like statistics I could feed you. The average age of vehicles on the road is a very easy statistic to get in the U.S. And indeed, there's categories of trucks and SUVs. The average age on the road is 18 years of age, and so the end of life 24 years of age type of thing. And so yeah, these vehicles, ICE vehicles, especially the bulkier pickups and SUVs, are lasting forever. And it's pushing the curve, if you will, on when they age out is certainly one of the pieces of that. And the other is, I think there's a larger, and that's all due to the price of not just electric vehicles, but I think ICE vehicles as well. There was a pretty significant spike in vehicle prices. people just can't afford a new car. And then the other dynamic I think that's going on is, a lot of these vehicles are pushing south. In the case of the U.S., they find their way to Central and South America, for the last, whatever years of life they can harvest out of them. And so there's an increased migration of vehicles, from the U.S. down to, Central and Southern America, and in Europe, largely to Africa and Middle East. Same phenomena there. So yeah, it's really pushing the age of the vehicles, but the weight will come back, and I have confidence that we will recover it. And I'm with you. I'm really hot on platinum for the future. I'm just worried about palladium dragging it down, if you will, right? And I'm afraid when it comes time that we're going to need the platinum, we're going to miss substantially. So I don't know if you have any thoughts there.
Yeah, I mean, I think it is a risk. I think it is a solvable risk, and I'd say that if you talk to the producers, they're all very cognizant of this being a risk, and I think they're working hard to try and make sure that it isn't something that you don't want to kill the golden goose, do you? So find a way to make sure that it keeps on laying eggs.
Okay, so let me challenge you in a way you probably didn't anticipate when you came into this interview. How big is the hydrogen economy going to get? People like to talk about it like it's going to be enormous. And I love to put this in the context of troy ounces. Let's put this just in terms of weight. When you're talking auto catalysts, the ICE vehicles today and catalytic converters, there's a series of sensors that have platinum group metals and spark plugs. You got palladium, platinum, and rhodium. There's close to 13 million troy ounces of weight annually that go into the automotive segment. And yet for the hydrogen economy, when we finally get there, for transportation, PEM fuel cells, all the transport and management systems, any liquid hydrogen carrier conversions, electrolyzers are going to pull some as well. My fear is there's just not enough platinum. That's been my fear all along, that I calculate that you're going to have about 3.5 to 4 million troy ounces available of platinum, with a little tiny market of iridium and ruthenium adding some weight. So 13 versus 3.5 or 4, how big is this thing, the hydrogen economy, really going to get? Is a concern for me. I don't know if you have any thoughts there, Ed.
Yeah, so look, I mean, I would probably put a slightly higher figure from a platinum perspective than 3.5 million ounces on there, because that's effectively your automotive demand today, and you can substitute out you can make a lot of that available. I think probably this is probably your logic here, through substitution with palladium and so on. But don't forget, you've also got a jewelry market that effectively you can draw material from. And maybe to a lesser extent, some substitution occurring in industrial applications as well. So I think there are opportunities to increase the amount of platinum available. If we think about the outlook, and I'll give you our numbers here. So we've got hydrogen demand for platinum in 2030 growing to a little bit over 900,000 ounces from a very small number today, plus minus 100,000 ounces. So it's quite dramatic growth. I mean, let's face it, when you've got dramatic growth forecasts, there are significant risks to that time frame. But I would say that what we've got is a fraction of what's included in, for example, on the electrolyzer side, in the International Energy Agency's database of planned electrolyzers. We're a thin sliver in terms of what we include within our forecast for electrolyzers. But adding to that, I mean, most of the demand fundamentally comes from fuel cell electric vehicles. In our numbers, we've got very few light-duty fuel cell electric vehicles. It's very much a heavy-duty driven outlook. And I think we've switched. So we have actually reduced our forecast quite significantly recently, and that's because of a change in methodology. Previously, we were being driven by government targets, and we've just watched those targets come and sail into history without being met. So we've pivoted now to an economics-driven analysis, which is probably fundamentally more sensible. And if you run the numbers and you focus on heavy duty as an example, and use different geographies around the world, different subsidies are available. In China and in Europe by 2030, including subsidies, and before you include anything like carbon taxes or anything like that on CO2 emissions, you get to cost parity with diesel for heavy duty vehicle applications by 2030. Obviously, you need people to be willing to adopt that on fairly uneconomic grounds between now and then, just as we saw initially in battery electric vehicles, or it gets subsidized by the manufacturer or additional government subsidies. But including subsidies in China and Europe, you get to cost parity with diesel for heavy-duty vehicles by 2030. You don't in the US, however. The subsidies in the US, excuse me, are just not quite good enough. And also diesel is comparatively lower cost than it is in China and in Europe. So the US, there's still a bit of a gap there. So we don't really have a huge amount of hydrogen demand for platinum in our base case forecast coming from North America. It's really a China and a Europe story.
Right. I agree. Well, that was a pretty well-rounded conversation. And so, yeah, I'm with you. I share your outlook. I think we're entering a phase of structural deficits. It should be good for the price of platinum. So obviously that should encourage your investment community. I don't know if you have any other closing thoughts here as we wrap up, Ed.
Look, I think just on the investment side of things, we work hard on that, and we're seeing really significant demand growth in China. And obviously, China can be a market where people get quite enthusiastic about things quite quickly. So we disclosed some numbers on that in our latest Platinum Quarterly, which came out a couple of weeks ago during London Platinum Week. The other thing just to bear in mind is that for Chinese consumers, they don't have an ability to hedge for Chinese end users of PGMs, industrial, automakers, and so on. They don't have any ability to hedge their exposure, so they're really limited to spot price purchases. Now, can you explain why that is? Can you explain why they can't hedge? There's no domestic futures contract for platinum or palladium, or futures contracts, I should say, whereas there is for gold, for example. Now, one of the interesting things that's going to happen later this year is the Guangzhou Futures Exchange, or targeted for later this year, is going to be launching platinum and palladium futures there. So, that could be quite transformative for the market in terms of managing price risk, and could potentially be positive for overall platinum demand from China.
Right. Fantastic. I did not realize that. That's good input, Ed. I did not know that. Well, great. So, Ed, I just can't thank you enough for your time. I think this was a pretty well-rounded conversation for anybody trying to quickly study up on platinum. So I really do appreciate your time.
Brilliant. Well, thank you for having me on. It's been great.
Next week, join us. We're going to have a special guest, Christopher Ecclestone. He's the principal and mining strategist at Halliburton and Company. We're going to be talking rare earths, vanadium, and antimony. Antimony? Who talks antimony? Nobody. We will next week. Join us there. Again, this is Matt Watson with Green Rush, mining the energy revolution. Thank you so much. See you next time.
Green Rush, mining the energy revolution with Matt Watson.